on CNBC-TV18. Canara Bank is the one that we are focused on. For the fourth quarter, the loan growth has been weak. Guidance for the loan growth also for FY25 has come in at about 10 to 11%, maybe a little lower than what markets were expecting. Business momentum and more is what we're going to focus on. We have the management with us. Mr. Satyanarayana Raju is Managing Director and CEO at Canara Bank. Mr. Raju, good morning. Great to have you with us here. Thank you very much. Prashant this side. Before we get to the numbers and the guidance, etc., if I can start by asking you to describe what is the impact on credit cost and capitalization and maybe even loan growth because of if the RBI's draft rules on project financing, which ask lenders to raise standard asset provisioning to 5%, is implemented as it is. Go on, sir.
So one thing I want to clarify to you, this our total corporate book is around 3.6 lakh crore. Out of that, 35% is working capital limits. Then remaining whatever the balance is there, 1,35,000 is pertaining to the NBFC. And what the left out is are also 40 to 50,000 crores we have lent to the state governments and central government. There it's for work towards their requirements. And finally it will be left out, hardly it will be together all the points like a project under implementation, project has completed but still 20% reduction is not there. Like that, if you take it out all the 3 points, it may be around 90,000 to 1 lakh crore will be our portfolio. What I want to tell you is we need not be so panic on that it will impact our NIMs or even a credit cost. The reason behind is you know that the last time also I shared with you that when the RBI has increased their risk weightages in the NBFC and the personal loan segment, we are part of that, we have passed on that profit to the burden to the borrowers. And we are comfortable and we are convinced our borrowers, and 95% of our borrowers came forward and taken that burden. So it has not, that has reflected in our net profit also. You see that the last year net profit was 10,600 crores. But the current year we have net profit is 14,554 crores, almost 4,000 crores incremental net profit is there. You know that the last year is the one of the toughest financial year for the bankers. Under such circumstances, we feel that it is only a preparatory for moving towards the India's, and it's an opportunity when banks are doing very well. It's a right time to do all these things. I don't think that it will impact our either credit cost or our loan growth or anything. We have given reasonable 10%. We have grown last time 11.34% the growth, credit growth. But let me say that in actual purposes, we've grown Raju, almost 13 to 14%.
Yeah. Mr. Raju, can I just come in, sir? Sorry, you know, lots of numbers and lots to digest. But just to take it one by one, so about 1 lakh crore is the portfolio, right? Or project finance. That's about... is that correct? 1 lakh crore?
Is that correct? 1 lakh, 90 to 1 lakh crore.
So that's about 10-12% of your total book. Is it possible? And there is also another bit. You know, there was a call yesterday which REC and PFs had done, and they were saying that loans which are guaranteed by the government maybe are excluded from this. What is your understanding? Is there, on loan growth, is it possible we see a small 5-10 basis point kind of an impact on future projects? Because this rule applies on all projects. Go on, sir.
Sir, actually, there are several clarifications we need from the regulator. Our department, risk department, as well as corporate loan credit department, both are working on that. Let me explain to you that they have given that these are all the conditions project under implementation. Is there any floor limit, whether it is a 100 crore project or 25 crore project or the 500 crore project? That clarity is still yet to come. Then again, one more thing what you are telling about that's guaranteed by the state governments or the central government, these clarities are also has to be required. Unless otherwise you get these clarities from the regulator, exactly assessing that what is the impact may not be the correct at this moment. But even if it is there, or if it is even if the regulator comes out and say that no, irrespective of amount you have to consider this, I don't think that there will be a severe impact on the credit growth. But the reason behind is ultimately the part of this burden will be accepted by the institutes, financial institutes, and part of will be passed on to the projects. You see that where this impact will be there, where DSCR is in thin margin and all. Well, so generally we have seen that all the projects are working with very comfortable DSCR, and I don't think this will impact anything. I don't see also that the impact on the project finance or the projects coming out will have too much impact, that visible impact will be there. I don't think so.
Mr. Raju, just to complete this point, and then we'll talk about business as well, but just to complete this point, as Prashant also mentioned, REC in its call yesterday said that loans that are backed by the sovereign, perhaps on them, these higher provisioning norms will not apply. I just want to know if you have any understanding to that. And you gave us a number, 1 lakh crore is the total size of the portfolio. How much of that is central government backed projects? And how much would be, X of that? And any back of the envelope calculations right now on possible potential capital impact?
Certain figures readily it is not available with me, but I'm sure that state government also, if they consider, our exposure will be definitely a 30 to 40% will be there in that.
Okay, so out of that 1 lakh crores, 30 to 40% would be backed by central or state governments. Got it. Okay. So let's now just shift the focus to the business as well. And there, I think, since yesterday we've been looking at a lot of the analysis. I think the market's trying to understand why your growth metrics are a little lower than industry-wide. I mean, whether we talk about the asset quality, whether we talk about the AUM trend or disbursals, Q4 has been lower than a lot of your peers. Just give us the reason why, and what's the outlook on credit growth for FY25?
Let me say that actually, you know that our CASA is one of the lowest, so we should effectively work on our NIMs margins. Otherwise, it will impact our bottom line. That's why we have taken a cautious call that we should be very active in funding to that credit or anything in the first 9 months to 10 months. And in the last 1 month, because it is only a top line game, that game we don't want to be active in that game because that will hit adversely our NIMs and margins. I am sure that you will accept that our NIMs, last year it was average NIM is 2.95. This time it is 3.05 with an incremental almost 10 basis point. You know that the cost of funds have risen steeply. Even then we are able to maintain that 10 basis point. Why it has happened is 2 years back we lent some 60 to 70,000 crores to few of the top rated companies or the public sector undertakings. 70,000 crores we lent at cheaper rates compared to the current incremental deposit rate. That became a burden for us to maintain at that time. So we started negotiating with all those parties whenever it comes for the review or renewal. If they are accepting our rates, it is okay. Otherwise, we are reducing our exposures to these companies. Though it's not, as a visible, it is looking at it is 11.34, but actually I can say that our growth was 14%. Since we are rejigging our portfolio, it is looking like that, but it is impacting and it is giving a benefit to the bank by giving a 10 basis points NIM incremental. That's why we are able to announce such a good results in the net profit and the operating profit, even after meeting the employee cost so high.
Okay, all right. Hi, Mr. Raju. The street was a little bit cautious because they believe that you were sounding too conservative on your guidance. But for the time being, you've given us some clarification on that front. I wanted to ask you about the gold part of your business. I recall that was growing at a very, very fast clip. The total book of yours is around 9.6 lakh crore. And the last recorded number that I have is around 1.3 lakh crore was gold. Could you tell us what is the updated number on the gold book? And is that growing at a faster clip? And since we have restrictions on NBFCs, there's the gold finances overnight, there's a restriction that's come in there. Earlier, there was a rap on the knuckles of IIFL Finance. Will it mean that a bank like yours has a bigger opportunity to grow at a faster clip?
Yes, sir. As on date, our gold loan portfolio is 1.51 lakh crore.
Okay.
Such a portfolio, we should be very cautious, very careful in lending and safeguarding those things. Whatever it is required, the infrastructure has to be created. We have created, we spent a lot of money on that, creating the safekeeping of the gold as well as in the testing of the gold and all those things. From last year, 1st April 2024 itself, before getting any alerts from the regulator as well as the ministry, we ourselves has taken a call that every loan sanctioned by one branch, by one appraisal, has to be cross-verified in quarterly basis by another branch, another appraisal. This system we have done, and current year we have cross-verified almost 74 lakh loan accounts. That precaution we are taking it. That's why we are not worried too much about those issues what it is cropping up in other banks. From our bank, we have foolproof system. in lending or all those things. Even if we are the first banker, we made it a jewel loan as a STP process. Now the entire documentation is digital. NESL ke saath we have a tie-up and we are doing that. The reason why it is growing is because the TAT. We mean for the TAT, that's why people are walking, it is coming that. You will see that we never given any publicity in the last 1 year for that to Canara. But it is an automatically growing it. But again, we have taken some cautious calls in doing this. We stopped extending the interest subvention for these things where it is not required. Now the interest subvention we are not allowing any of the branches. That's why earlier it might have grown at a 25% or 30%, but current year what we are expecting is, since we have made it little more stringent in the rules and regulations, our growth may be around 15 to 20% in between. And again, let me say that when the opportunity in the NBFC, because there are some restrictions, definitely I look forward to see that there will be a better opportunity, but the expected growth will be around 15 to 20% in that.
Okay, that's the gold loan portfolio. So just to sum things up, Mr. Raju, to go back to the overall growth point, the takeaway is that you will be sacrificing on growth in FY25 to protect margins. Is that the right way of looking at it? And any possible upside to the guidance? You're guiding for, I think, only 10% loan growth. But as Nigel said, is that being too conservative early in the year? Are there any green shoots? Gold loan, you mentioned 15-20%, but on the corporate side or any other segment where you think you could perhaps second half of the year start picking up?
Let me clarify to you, Madam Surabhi. Actually, it's a practice of the Canara Bank that we generally give guidance at a conservative way. But we outperform whenever, if you see that the last 3 years consecutively our performance, everywhere we outperformed our whatever the guidance we have given. So that we don't want to promise something and we don't want to achieve certain things, we don't want to see anything. Last time also we are given a growth rate of 10%. Even after rejigging so much, though the actual growth is 14%, we landed at 11.34%. Why I am telling is our 12 to 13% growth is definitely it will be there. You can see from our RAM credit is growing at 14%. Whatever we are doing, rejigging is only on the corporate book. The corporate book, when we have that, we want to continue that. But now, majority we could complete it in first 1 or 2 quarters. Also, I don't see that any fall in the credit growth, because let me clarify to you, as on April 30th, we have in advances itself is more than 4,000 crores incremental growth is there in the April month itself. Generally, every bank will suffer in the negativity in the first month. But our approach is totally different. When market is not a hyper, then we want to do more business on that so that my margins will be taken care. That is the reason and nothing else. But we are very much confident that our credit growth will be not less than 12%. But generally we share with the analyst or anybody in the initial stages of the financial year, we give some conservative figures.
Okay, all right. Very quickly, sir, and this year should we be looking at you, looking to sell your stake in Canfin Homes, or that's not on the cards for FY25?
As on date, it is not on the cards, sir.
Is it a price issue, or you're not considering it as of now?
We believe that still the valuation is undervalued.
Okay.
We are working on that.
Okay. All right. So thank you very much for joining in and giving us contours on the business as well as this whole issue around project financing. That is Canara Bank. Let's quickly move on and